I convened the heads of Israel's security organizations and authorized a surgical precision strike on the terrorist chiefs of Hamas. Israel acted wholly independently, and we take full responsibility for this action. And this action can open the door to an end of the war.
The Israeli attack that took place today on Qatari soil can only be described as state terrorism carried out by someone like Netanyahu within the context of these systematic policies and his ongoing attempts to destabilize regional security and stability. This is a clear message to the entire region. The message says there is a rogue player in this region, ongoing political recklessness, and violations of state sovereignty.
I'll be giving a full statement tomorrow, but I would tell you this. I was very unhappy about it, very unhappy about every aspect, and we got to get the hostages back. But I was very unhappy about the way that went down.
Israel's attack against Hamas in Qatar drawing rare public criticism from President Trump, underscoring the risk that the war in Gaza could get worse before it gets better. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Oil prices rise after that Israeli attack in Qatar revived fears of an escalation in the conflict in the region that is the source of about a third of the world's crude supplies. And we speak to someone with very deep experience in the region, Thomas S. Warrick, who formerly led counter-terrorism policy at the U.S. Department of Homeland Security, joins us with his take. And as the U.S. retreats from its global role and Trump threatens more tariffs, we look at how the funding of big infrastructure development projects will change. We speak with the CFO of the AIIB. And speaking of big projects, AI has stoked huge demand for power. We speak to the CEO of the biggest producer of gas turbines on how demand is shaping up. Our top story today, a dangerous escalation in an already volatile Middle East. Israel has struck Qatar's capital Doha, targeting leaders of the Palestinian militant group Hamas, marking a significant escalation in the regional conflict. The unprecedented attack on a U.S. ally sends shockwaves through the region, drawing fierce condemnation from across the Middle East and other Western powers. Let's get details. Horizon's Middle East and Africa anchor Jumana Basachi joins us from Dubai. Jumana, Qatar calls it terrorism, a flagrant violation of its sovereignty. Tell us more on how Qatar and its neighbors, including the UAE and Saudi Arabia, are reacting.
That is right. An act that can only be described as state terror is what you played earlier on in the show in the introduction. Those were the words of Sheikh Mohammed, the Qatari PM. He also added that it was a flagrant violation of Qatar's sovereignty and all international laws and norms. Now, what Israel said when they took responsibility for the attack yesterday is that they had targeted a residential complex, but that it was a precise attack and they were specifically targeting the Hamas negotiating team, including the chief negotiator Khalil al-Hayya. But Hamas later put out a statement saying that they had failed to assassinate the negotiating delegation. 5 members of Hamas were indeed killed, but also a Qatari security official as well. IDF were targeting them specifically over linkages to October 7. Now, of course, this is a crucial time because the U.S. have been pushing to get a ceasefire deal across the line. But what you have in the last 24 hours is an attack both on the Hamas negotiating team, the negotiators themselves, and an attack on the country that is playing a key mediator role in getting those terms agreed to. So where we go from here is up for debate. Qatar have said that they would want to continue with the diplomatic efforts, but that the actions of last night set them back considerably, especially as it pertains to the most recent ceasefire proposal. And then the reactions from the rest of the region have come in thick and fast as well. Very quick condemnations coming through from the likes of Saudi Arabia, calling the action criminal, a blatant violation of the principles of international law and all international norms. The United Arab Emirates, also one of the first countries to speak out, very significant as well because they signed on to the Abraham Accords normalization agreement with Israel 5 years ago, also not mincing their words and warning that it could have extremely dangerous repercussions for regional security. Trump has not made an official statement, but he is expected to speak later today. Haslinda.
Jumana, thank you for that. Horizon's Middle East and Africa anchor Jumana Masechi coming to us from Dubai. Now, the U.S. has made a rare public break with Israel after its attack against Hamas in Doha. President Trump, caught between two U.S. allies, said he spoke with both Israeli Prime Minister Benjamin Netanyahu and Qatari leaders after the strike, and that he assured Qatar that such an attack would not happen again.
I'm not thrilled about the whole situation. It's not a good situation. But I will say this, we want the hostages back, but we are not thrilled about the way that went down today.
Did he notify you in advance, Mr. President? Did Israel tell you in advance? No. So you were caught by surprise, sir?
I'm never surprised by anything, especially when it comes to the Middle East.
Let's get perspective on the Middle East crisis. Thomas Warrick is non-resident fellow at the Atlantic Council. He was formerly the Deputy Assistant Secretary for Counterterrorism Policy at the U.S. Department of Homeland Security. Thomas, good to have you with us. We heard Trump saying that, you know what, he'll ensure this will not happen again. What is shocking is that it actually happened, and he even went on to say that the U.S. didn't know about it. Is that even possible?
Actually, it is. Those of us who've worked in the U.S. government and with the Israelis understand that what happened in this case appears to be that several days ago, Israel said both privately and publicly that they were going to target senior Hamas leadership wherever they could find them. And when the United States didn't say, well, don't attack them in Qatar, obviously wasn't anyone's thinking. Israel went ahead and did it. And then the United States found out about it through its military means only minutes before the strike was actually due to hit. That's not a good situation, but that appears to have been what happened here. This is exactly, however, also what happened when Israel took out senior Hezbollah leadership in Lebanon. The same thing happened when they set off pagers that killed hundreds of Hezbollah operatives. And so this kind of limited notice is actually the way Israel carries out operations that it considers extremely sensitive but extremely vital for its national security.
Do you see this as a signal in Israeli policy that is willing to do more extraterritorial operations, even when it comes to U.S. allies?
Well, more to the point is that this seems to have been intended to derail peace talks that Israel felt weren't going anywhere. One of the things that divides Israel and Hamas, in fact, the major issue, is Israel insisting that Hamas lay down its weapons, whereas Hamas insists it can keep its weapons, which would allow it to retake power in Gaza and start another war whenever it wanted to do that. There is no bridging this divide at the moment. But Qatar and Egypt had some very strong words with Hamas's leadership in Al Alamein, Egypt, several weeks ago. And the Qataris were at least somewhat optimistic that they might be able to achieve progress. Trump, however, is convinced that Hamas will never give up the hostages until it's forced to do so by military means. And that's the origin of his statement that he wasn't sorry to see Hamas attacked, but he was very angry that it was done in a country that he regards as vital to putting together a peace deal that he very much wants to see happen.
So we're quite sure that this is a much bolder Israel. Is it also a much more desperate Israel in wanting to counter Hamas, in wanting a resolution to it?
I wouldn't call it desperate. The Israeli strategy at the moment is to carry out a military campaign that will kill Hamas fighters and degrade Hamas's capabilities even further than it already has. The fact is, however, that will result in some civilian casualties that Israel is willing to say is acceptable, along with a death toll of some Israelis who would be killed in these military operations, which is less acceptable. The Israeli people want a very different outcome. Polls show a much stronger support for a deal that would end the war, get the hostages back, and then be ready to attack Hamas the next time they posed a threat to Israel. None of this, however, is any good for the Palestinian people. That's the truly sad aspect to all of this. Only getting Hamas out of power, as many countries tried to urge in a declaration that was adopted in New York at the end of July. And so in that respect, Israel, the United States, Arab countries, and Europe all want to see Hamas out of power. They all want to see Hamas disarmed. But the problem is nobody has figured out a way to make all of these things happen at the same time.
And the question they must be asking is how far Israel is willing to go. What comes next?
More military offensive in Gaza is very clearly the immediate answer. One thing I do think that will happen as a result of American displeasure or anger over what Israel has done on Tuesday is you're going to see more U.S. efforts to press Israel to come up with a real post-war plan. We know there was a meeting that Trump chaired a couple of weeks ago. He's tasked his son-in-law, Jared Kushner, and former British Prime Minister Tony Blair to come up with ideas. There are a number of actually workable ideas that are circulating out there. Yet Israel has so far been reluctant to actually commit to any of them, except for 5 very general principles that the Israeli cabinet approved on August 8. If you get more U.S. pressure to come up with a real post-war plan, then you start figuring out how to make it real. And once it starts to become real, it's going to get a momentum of its own. So I think we're going to see more serious U.S. efforts to press Israel to be very practical. None of these pie-in-the-sky Gaza Riviera ideas. Let's figure out how to put international governance in Gaza, put some boots on the ground, probably from Arab countries, perhaps Australia, perhaps Europe, that would police Gaza, but have the IDF go home.
From an international perspective, I'm just wondering, does it set a precedent for international law, for state sovereignty? How are you looking at it, and how should the rest of the world be looking at this attack?
Well, so this attack takes place in a very odd place in international law. Technically, sovereign states don't carry out terrorist attacks. They carry out acts of war. In this case, it was an act of war against a terrorist organization, the kind that many governments, including the United States, but also including such countries as Russia and others, have carried out under very different circumstances. The problem here is those attacks normally get carried out only where the safe haven state is not cooperating in terms of dealing with the terrorist threat. And what really angered the Qatari emir and his prime minister is the principle that transcends all cultures in the world, that an envoy to peace talks should not be attacked. This is a tradition that literally goes back thousands of years, and every culture in the world is supposed to respect this tradition. And this is what got the Qataris even more incensed than just the fact that it was an attack on their soil. Qatar was attacked by Iran a few weeks ago, expressed outrage over that. But in this case, they saw themselves in the role of peacemakers and trying to bring together parties who were fighting a war with each other, and under the traditions that they cite, which many cultures and faiths do adhere to, you don't go after peace envoys with military attacks.
Thomas, for Qatar and I imagine the rest of the Gulf states, Israel is becoming a destabilizing force. Is there truth in that? Is there some truth in that?
Well, it's not destabilizing beyond the actors who are attacking it. So there's a limit to this. Unlike Iran, which has carried out operations through proxy forces that have destabilized Iraq, Syria, Lebanon, Palestine, Yemen, Bahrain, Saudi Arabia, Argentina, I can go on. Those actually do destabilize those countries. Israel is fighting a very limited set of enemies. Iran, which has vowed Israel's destruction, has Hamas, which carried out the deadliest attack on the Jewish people since the Holocaust, Hezbollah, which had threatened to burn Israel to the ground many times, and Israel, at least in American eyes, has a right to defend itself. But the way in which it does so makes a difference. And we're seeing that President Trump, like President Biden before him, really wants to put limits on how Israel carries out its defense.
One final question before we let you go, Thomas. I mean, how will this shift perhaps relations between the U.S. and the Gulf nations now?
Actually, it'll probably have very little effect in the long run. There's a lot of unhappiness that the United States did not somehow turn this off, but the facts are that Israel did not give the United States a chance to turn this off. That actually is a standard Israeli method of operation. I expect we're going to see more warnings like the one we saw a few days ago from the United Arab Emirates that told Israel to stop trying to annex crucial lands in the West Bank, or it would risk any normalization possibility with Arab states. I think we're going to see similar kinds of warnings, and Israel needs to limit its actions. Fighting Hamas in Gaza is bad enough, but trying to go after Hamas in Arab capitals, especially when they're there as part of peace talks, is not going to be something they're going to look even mildly favorably upon.
Thomas, thank you so much for your perspective today. Thomas Warrick of the Atlantic Council. Still ahead this hour, JPMorgan's head of Asia Economics and chief India economist will be with us as Trump is set to mull new tariffs in New Delhi as well as China. Keep it here with us. This is Bloomberg. Welcome back. Bloomberg has learned President Trump is willing to impose new tariffs on India and China, but only if EU nations do the same. The proposal is aimed at pushing Russian President Vladimir Putin to negotiating table with Ukraine. This also comes as President Trump extended an olive branch to his very good friend Narendra Modi. In a social media post, Modi replied with a tweet of his own, declaring the U.S. and India are close friends and natural partners. Let's get perspective from Sajjid Chinoy, head of Asia Economics and chief India economist at JPMorgan. Sajjid, good to have you with us.
Morning, good to be here.
We'd like to think that this is just a symbolic move by Trump, but it carries repercussions if it comes true.
If it goes through, it's actually quite important and could be meaningful because consider the starting points here. China's effective tariff by the U.S. is already 42%. It's the highest in the world. India is the second highest in the world at 34%. So the starting points are high tariffs by the U.S. already. Number two, China has performed better than expected in the first half. A lot of that is actually export growth. Now, some of that is front-loading, which will reverse, but some of this is the fact that China has very cleverly found other export markets, including Europe, which has been a key hedge to slowing exports to the U.S. So if Europe were to put on, tariffs on China, then that really questions the export diversification story over here. So, if this does go through, this will have meaningful impacts, both these economies. The hope is that perhaps every EU nation has to agree, so it remains to be seen if this actually gets carried out. But let's not forget the implication beyond India and China. Remember, China buys 2.2 million barrels of oil a day from Russia. India buys 1.7 million barrels. If these two economies were to stop buying oil from Russia and were to go to the open market, it's very unlikely that other suppliers can meet this demand. OPEC Plus can't ramp up so quickly. US shale can't ramp up so quickly. So the impact on global oil prices could be meaningful, which affects affects inflation around the world, including the U.S. consumer. So I think the implications here are manifold beyond what happens to India and China.
So inflation is one, growth is the other.
Right.
By all calculations, growth, especially for Asian economies, is likely to slow down.
It is, but so far Asia is surprised to the upside. Second quarter growth was extremely strong. Now a lot of that is, front loading to the U.S. that is going to unwind. Some of that is transshipment. You're seeing China's exports to the U.S. being transshipped through third countries in Thailand, in Vietnam. But there's the known unknown here is because tech has been at the center of this export growth. Some of this is front loading, but some of this actually could be very strong AI demand, which is more organic. We saw Taiwan's exports come out yesterday, extremely strong, much beyond what any of us had expected. So there may be, growth in the third quarter in Asia could surprise to the upside because a lot of this is being driven by tech exports to the US, which are driven by the hyperscalers and AI.
You talked earlier about how China has managed to find alternative markets, Europe included. Don't forget, in a big way, Asia. And Asia at risk of, being dumped with cheap Chinese goods. How might that play out eventually?
That's exactly right. I think the context is important. China has a lot of excess capacity. Exports to the U.S. were about 15% of its total export basket, which is lower than what happened in 2017. And already you're seeing that those exports have come down from 15% to 10%. So those exports are going somewhere else. Mm-hmm. Some of this is Europe and Africa and the Middle East and Latin America. Some of this is Asia. Now, to the extent that it's being transshipped, that's not an issue. But you're exactly right that the risk to Asia is twofold. That A, the world becomes more protectionist, and that hurts exports, and B, you're competing with this very cheap Chinese imports, which are hard to compete with, which is then impinging on manufacturing capacities from Thailand to Indonesia to India. So it's a double whammy that you've got to compete both at home with China and in third markets, as well as on the export.
Perhaps it is a triple whammy because we're also seeing a weaker dollar. And that is detrimental to Asian exports.
Well, yes, you're right in the sense that, if currencies move up, that will be another headwind towards export. But there is an offset here. And the offset is that a weaker dollar will actually allow central banks in Asia to cut interest rates. What we've seen in Asia is, despite very strong export growth, there's a lot of slack in these economies because domestic demand in the region is still very soft. It's meant core inflation has been, very benign, undershooting targets, and that's allowed for Asian central banks to have large monetary easing cycles. The fact that you've got a weaker dollar gives central banks more headway to keep cutting interest rates, which is an important safety valve if exports are going to slow.
But if expectations are that inflation might go higher with the new tariffs, perhaps Asian central banks might just pause and wait before cutting further. That makes sense?
Well, at this point, what you're seeing is inflation continues to surprise to the downside. And remember, if you've got cheap Chinese imports flooding Asian markets, those are disinflationary. So the combination of domestic slack in many economies and cheap Chinese imports has kept core inflation very benign. I think the last thing Asian central banks have to worry about right now is inflation. The bigger focus is going to be on growth. We've had a very strong second quarter, third quarter shaping up okay, but what happens going forward?
That is the big question. Sajjid, good to have you with us. Come back again soon. Sajjid Chinoy, Head of Asia Economics and Chief India Economist at JPMorgan. Still to come, AIIB CFO joining us next to talk about how funding for big development projects might change as the U.S. retreats from its global role. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. President Trump's global tariff war is putting trade and geopolitical risks front and center of investment decisions. His landmark policy has since brought rivals China and India closer together as they both face pressure from the U.S. over their continued purchase of Russian oil. Beijing-based AIIB says it expects the heightened trade tensions to reshape supply chains as it prompts governments to consider financing new infrastructure projects. Let's get perspective from Andrew Cross, CFO at Asian Infrastructure Investment Bank. AIIB is a multilateral development bank with over 100 members from 6 continents, representing 65% of global GDP. Andrew, good to have you with us. Talk to us about the conversations you're having with member nations against this backdrop of shifting geopolitical tensions and what that might mean in terms of infrastructure funding.
Haslinda, let me first say thank you very much for the opportunity to be here to represent AIIB. I think it's a very fair and pertinent question when you consider that the infrastructure gap in Asia is something like $5 trillion. When you think about that $5 trillion, multilateral development banks, of which AIIB is a member, we finance about 5% of that gap. So having more participants in this area, especially as the area tackles many of the challenges that you've just outlined in your question, it's really, really quite an ask. And obviously we have to get private capital mobilization very involved in this space.
So are you anticipating that countries seen closer to China now might be looking for greater funding for their infrastructure from the AIIB? I mean, we've seen shifting alliances. We've seen how China, India, Russia came together, China and India getting closer, China, Southeast Asia also getting closer.
Yeah, I mean, if you look at the evolution of the bank from 57 founding shareholders, which include the ones that you've mentioned, we now have 110 members who participate in the bank. India is one of our largest utilizers of the bank's capital. We've got, I think, something like 56, 57 projects out of the 330 that the bank has done in its 10 years of existence. So essentially, AIIB, as a multilateral development bank, has built a large tent of 110 countries that come together because they want to build infrastructure which has a massive impact on people's lives. And so they work together for a common cause, which is how to create positive change through investing in infrastructure. The challenge is enormous, as I said.
But I guess, Andrew, the question really is whether AIIB sees greater opportunities to play its role in being the lender, the choice lender of the world, perhaps.
Well, if you look at our balance sheet, we've got $100 billion from our shareholders. So the challenge that you're talking about is enormous. It goes well beyond a single institution like AIIB, hence why we've partnered with Asian Development Bank and why we've partnered with the World Bank. As I said at the beginning, and which you rightly sort of point out, the gap is enormous. No single institution has the capital to be able to address that gap. And again, that links to why the MDB organizations have been so connected and so loud about the need to work with the private sector. I mean, the acronym of private capital mobilization is really about how do we partner together to address this issue. Many of the projects are extremely difficult. You know, something like half to 65% of infrastructure projects in Asia are not financeable unless an MDB or the private sector gets involved. So if I come to your question about, essentially, is there space for participants? Absolutely. Is there space for just a single institution? It goes well beyond a single institution. And that's why I think AIIB has grown from its 57 shareholders to 110, because countries and our peer group recognize the size of the challenge.
We're having this conversation, Andrew, against a backdrop of a weakened dollar. That dollar is expected to weaken even more with expectations of the Fed cuts. I'm just wondering, given that your contracts, 2/3 of your contracts are in US dollar, is there reason to rethink that the USD may remain the dominant currency that you use?
I think dollars for us is a key currency. Our capital is paid in dollars. We fund overwhelmingly a large portion of the bank in US dollars, and our clients are utilizing US dollars to fund their infrastructure projects. At the same time, local currency, the use of local currency makes a lot of sense in many regions around the world. Matching risk and liabilities, assets and liabilities, risk and reward in the same currencies makes a lot of sense. Dollar is key. Dollar is key in terms of maturity that you can borrow in. Dollar is key in terms of liquidity. Dollar is key in terms of access. And at the same time, you've got a growth rightly in local currency because you're trying to match assets and liabilities. You're trying to avoid FX risk. But at the end of the day, the bank, being very, very client-focused, responds to the needs of our clients. And overwhelmingly, many of our clients are seeking US dollars to fund their infrastructure projects.
We know that you're diversifying your funding mix. You tapped the Hong Kong dollar bond market earlier this year. Is there reason to think that more is to come?
Yeah, I think it's a very reasonable question. We're very committed to diversifying our sources of capital through the capital market. So as a multilateral development bank, we borrow in all of the major hard currencies, G7, G10 currencies. And at the same time, many of our clients are seeking capital and finance in the domestic currency. If you really think about infrastructure, which is, one of the hardest asset classes to be involved in, infrastructure is not an asset that you can move. It's a very domestic asset. So growth in local currency capital markets, really important. How can we build domestic capital markets that can offer liquidity and maturity? But at the same time, dollars is very, very important to the bank and to our clients.
So you're looking for more issuances, perhaps along the themes of what? Sustainability, green, social. Is that a fair assumption?
Yeah, so if you look at the issuance that we do, it's all done as sustainable development bonds, which sort of connects very directly with our use of proceeds. As I said, 330 projects, a lot of that is in the climate space, a lot of that is in renewables. The bank also issues it in major other currencies like Aussie dollars, Hong Kong dollars, as you rightly pointed out, increasingly becoming a viable public market, euro as well. So the currency is growing, the currency mix is growing, and again, that's a focus on what makes sense for us as an MDB to have diversified access to capital markets and what makes sense for our clients. I mean, if you look at our 2030 strategy, we want to do at least an additional $75 billion worth of investments by 2030. That's going to be in a mixture of currencies.
Andrew, we know that MDBs, including AIIB, have been wanting to mobilize greater private capital. It's been really challenging. And we know that for AIIB, you've mobilized about $10 billion since inception through 2023. Why has it been so difficult? And what are you doing differently to actually attract more private capital?
Yeah, I think this is a really pertinent question. I've been involved in development banking now for 20 years. I mean, I had 14 years at the World Bank Group before having the privilege of joining AIIB in 2019. Private capital is really challenging. I mean, part of it is the projects. Finding well-prepared projects is really difficult. So the bank has a project preparation fund. How do we assist our partners in the due diligence, in the environmental studies? That's one part of it. Second part is blended finance. Getting private capital into this space where they believe the risk-reward makes sense is challenging. And so we have to think about how do you change that dynamic? How do you either reduce the risk through capacity building or how do you improve the reward by, incentivizing the private sector? And then the last part is really around data, enabling people to fundamentally and realistically assess and price risk. And if you look at much of the G20 CAF reforms that have been going on for the last 2 years, where AIIB has been a very, very active participant, you've seen an expansion of what is called the GEMS database, which is the database around projects, loss given defaults, probability of defaults. That's really about giving data to the private sector so that they can fundamentally assess the risk and therefore the appropriate reward.
But is it also about reforms to do with regulation, also institutional reforms? Might that help? And could we be seeing that anytime soon?
Yeah, I think reforms, I would sort of change the word to capacity building. So how do you create an environment where you have strong institutions, strong implementing agencies, consistency and reliability around policy, rewards? That's sort of like the unsung hero of the need for infrastructure investment that goes beyond the projects. It takes time. It's not straightforward. It requires a lot of partnering with institutions, governments and shareholders. And that's why you don't see a dramatic, easy solution to getting the private sector involved.
Andrew, thanks so much for joining us today. Andrew Cross, CFO at Asian Infrastructure Investment Bank. Coming up, Mitsubishi Power President and CEO will be joining us from the sidelines of the NLIT Asia Conference as we dig deep into the energy outlook for the ASEAN region as AI demand grows. This is Bloomberg. Welcome back. You're watching Insight. We're tracking a third straight day of gains in oil after Israel conducted a strike on Hamas leadership in Doha, raising concerns about a fresh escalation in Middle East tensions. The moves in energy markets come as President Trump is said to be open to ramping up pressure on India and China with higher tariffs in a bid to get Russia to negotiate for peace. Ties between Washington and New Delhi have deteriorated in recent months over India's continued purchases of Russian oil, leading to Trump imposing 50% tariffs on Indian goods. But both Trump and Modi also posting on social media today expressing optimism they will speak in the coming weeks to negotiate a resolution. Another key goal of Trump's tariff strategy to re-industrialize America. This includes his goal to lead the global AI race, which requires energy-hungry data centers. Our next guest, Mitsubishi Power, is the world's biggest supplier of gas turbines and forecasts 50% more demand for the equipment annually through next year on booming AI growth. Joining us exclusively from the NLIT Asia Conference in Bangkok is Mitsubishi Power's President and CEO, Takao Tsukui. Takao-san, good to have you with us. We talk about how there is that gas turbine crunch. Talk to us about just how tight, and is it about to get tighter from here?
Yeah, first of all, thank you for having me here. Great to be talking with you. The supply, you're talking about the gas turbine boom coming with the AI demand. Yeah, it's pretty tight, but we are trying to support as many customers as we can, especially in this ASEAN region. That's the reason why I'm here today in Bangkok, and we have a lot of projects ongoing. We just started a project in Vietnam. We're about to close a couple of projects in Singapore. Thailand will follow very soon. Malaysia is also active. So we're seeing a lot of actions in this region, and it's really excited to support the customers.
So the surge in demand has to do a lot with AI, or are there other factors contributing to this crunch we're seeing right now?
Well, I think the AI demand first, of course, started mainly from the U.S. market, and now it's happening in the ASEAN market also. But I don't think that it's not necessarily all about AI. It's natural growth of the economy and also some retirements of the older units. So there's a lot of factors that are making the utilities and investors to move towards gas generation.
You talked about wanting to ramp up production. I'm just wondering whether you're seeing challenges in doing so. Could you see perhaps a shortage of equipment given the expansion plan?
Oh, yeah. We're working hard right now for the expansion plan, not necessarily just purely investing, but more of like productivity and automation. So we're reviewing all of our processes in a very detailed manner and trying to improve as much productivity as possible to have better output on production with the existing facilities as much as possible. So it's a work in progress. We'll start to see some results maybe in a couple of years from now.
What is the timeline for a new gas turbine? How long does, a client have to wait to get one?
That's a great question. It does depend on the project situation. If the project is really ready to go and the customer can move with all the financing already, it's usually standard would be like 2 years for the engines to get delivered and maybe 3 to 4 years for the plant to be in operation. And it depends basically on which country and what the project situation is. But that would be some kind of standard answer for me.
Let's pick a country then. Thailand has been wanting to generate even more power. What does it mean for this, for this economy? What's the timeline, and what are the risks that Thailand may not be able to produce the kind of energy that it wants?
Yeah, for Thailand, we just finished our 10th unit of our JAC, the most advanced gas turbine plant in this January. So 10 units accumulate up to 7 gigawatts of power just with this 10 units of our JAC machines. So Thailand has always been pretty sufficient with gas. It's dependent on the gas generation, and a large majority is from gas. I think investments will start again from like next year onwards, and we can support the customers whenever they are ready to go forward.
So is there risk that Thailand may not be able to build its power plants on time and at the cost that it wants?
Well, that's a difficult question. It's a moving factor. I would say that inflation has hit everyone. We have had our suppliers have impact on their pricing because of inflation. So cost is rising for sure. Power plants are getting more dollar per kW. We call them it was before, but it's for any country. It's not necessarily Thailand. It's in the Americas. It's in Middle East. Generally, the rates are going up.
Takao-san, you talk about how rates are going up, and you can only imagine that the cost of gas turbines are also increasing given the demand. Talk to us about, the increase in cost.
Yeah, I would say compared to 5 years ago, maybe 50% increase, a little bit, maybe more. But it's in line with other equipments and the whole equipment or the facility of a power plant. It is in the range of that kind of percentage that costs are going up. And but we're trying to support the customers as much as possible. Also, keep in mind, power plants' huge cost structure is also the fuel. So we also always look very closely into the fuel price, which means basically the gas price. Asia's gas price has been fluctuating quite a lot in this past 10 years due to multiple reasons. But also gas price, we have to be very careful about.
So in terms of demand, can you quantify what we're expecting in the next 12 to 24 months? Is it going to be a short-term crunch, or do you see that going longer?
Yeah, I would say we see very high demand for another couple of years. We forecast at least 3 years to continue this kind of situation. Maybe it could go up to 5. But it's not going to suddenly drop significantly. Gas is a very, very dependable source of energy today, and combined with renewable power, gas is very, very complementary to supply affordable and sustainable energy. So I don't think it's going to be like a sudden fall in a couple of years. Pretty good demand will continue for another 5 to 10 years.
And we know that governments are increasingly looking at their energy mix as they try to meet their energy needs. Hydrogen increasingly becoming an option, and we know that you're conducting pilot programs right now. Talk to us about where you are with it and, how optimistic you are about it.
Sure. If we talk about hydrogen, the challenge is going to be definitely the supply chain side more than the technology side. We have our own validation plant in our facility in Japan, a little bit west of Osaka, where we have a plant called Takasago, and that's where we validate our hydrogen production, storage, and utilization within an actual power plant that we own and operate. So we've gone up to 30% in that facility. We've done 50% validation mixing, the amount of volume of mixing the hydrogen, 50% in the United States. So we're continuously developing this technology. So 30 to 50%, we're very, very confident today. And in the future, we will aim up to go to 100% of hydrogen firing gas turbines.
So to what extent do you think this will help Asia in its transition needs and, I guess, energy needs going forward?
Yeah, for Asia, ASEAN countries, obviously you cannot and you don't want to stop the economy growth. So it's a balance between the economy growth and also decarbonization. And that's why we are seeing this demand on gas, because it is a very, very future convertible product or equipment. Either you could do carbon capture on the back end, or you could do green fuel like hydrogen and ammonia on the front end as a fuel. So we will be continuously seeing gas investments in this region, and then in future, when the supply chain is ready, hydrogen and ammonia to be utilized, or you could add on the carbon capture equipment.
Takao-san, talk to us about plans, manufacturing plans in the U.S.
Sure. First of all, we do have a manufacturing plant in the U.S., equivalent size of what we have in Japan. It's in Savannah, Georgia. And so we have diversified our production capability between Japan and U.S. And actually, this works very well. A lot of the projects that we support in the U.S., we manufacture the engines in Georgia, Savannah. And other countries we would support from our Japan plant. So we are balancing the two.
Are you struggling to find workers for your manufacturing plant?
Well, that's a challenge in, I think, any country today. There's a lack of workers in many areas, but currently I think we're doing pretty well, both in Japan and the U.S. We are keeping our production slots. We aren't seeing any delays on production. We are continuously hiring people to increase our capability. So far, I think we're working pretty well.
Takao-san, thank you so much for your time today. Great perspective. Takao Tsukui, President and CEO of Mitsubishi Power. And before we go, here's a look at our show tomorrow. We'll speak with the National Bank of Cambodia Governor Chiseri as central bankers across Asia brace for an expected Fed rate cut next week. And that is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.